So, as I mentioned in my last video, I am trying to make sure I can be in a position to choose to leave the 9 to 5, create a passive income stream through investing and achieve financial freedom. Now, a big part of how I plan to do that is through investing in the stock market, using my investments to generate a dividend income and either reinvest that or withdraw it from my account and use it to pay for things that I might need to cover in life, particularly when I get further down the line in this journey and want to start covering some of my monthly expenses. I've already got some investments in my Halifax self-select stocks and shares ISA, so I'm not starting completely from scratch here, and I wanted to just share with you all what that position is and where it is I'm starting from, and then I'll go into how I plan to grow my positions and increase the size of my portfolio to change how I'm going to receive dividends and hopefully see some growth from my investments. So the first of my holdings that I want to highlight is my S&P 500 index tracker with Vanguard. I've got the distributing version of this, so once every 3 months they pay a dividend out to me that lands in my account, and then I'm free to do with that what I wish. I've got about 500 quid in that tracker. It pays 1.7% dividend, so that's spread across those 4 payments during the year. I like the idea of that return, but I'm also really keen to see some of the growth the S&P 500 is well known for. It's a nice lower risk tracker to be part of. Got some nice low fees as well, so not costing me too much to be involved there. It's something that I plan to grow through some of my monthly contributions. Between that and the UK FTSE 100 equivalent, those I intend on having as my main index trackers. Fairly solid base for the account, something to give it some good solid stability. The second of my investments that I've got in the account at the moment is the Supermarket Real Estate Investment Trust. Now, that ticker code SUPR, I've got another 500 quid in there. I'm really interested and confident in the asset base they're holding, and I believe it's something that can grow quite well over the next coming years. It's quite a stable market that is supporting. A lot of supermarkets in the UK use them. They've got assets across some European countries as well, so I should expect to see quite a good revenue stream there, and as interest rates start to drop, their costs should decrease as well. Fantastic dividend there, 8.1% at the moment. As with the index tracker with Vanguard, it pays once every 3 months, so 4 times a year I'll get that one, and I have that paid out into my account as well. I'll explain why I do that a little later in the video, so hang around to have me explain that to you. The third of the investments that I've got in my stocks and shares ISA at the moment is a bit of a legacy one for me, a bit of a sore point. I've got about £5,800 in a company called Evraz, which is currently suspended from trading due to being a Russian-based company. It just happens to trade on the London Stock Exchange. Now, before it was sanctioned and suspended, I bought my shares there due to it having a really quite fantastic dividend. What they provide fairly raw materials to a lot of industries around the world, one of the main products being high grade steel for railways. Now, at some point, hopefully that will come back to the market and resume its trading and its manufacturing of products, and then at some point that dividend will return. So fingers crossed for that one. Obviously there's a bit of conflict that's got to be resolved first, and hopefully that happens sooner rather than later. So those are the 3 investments that I hold in my account at the moment, and something you'll have noticed there is that each of them pays a dividend, except for Everaz, obviously it's not trading at the moment. But what I'm trying to achieve is get a dividend coming in on a monthly basis that then I use to stack on top of my next month's investment. So trying to shorten the period of return on each of those dividends, the idea being that if I reinvest it into my contribution for the next month, that then receives a dividend, provided I'm in ahead of the ex-dividend date for the investment I make with that new money. Shortening that period, I'm hoping to get a very marginal increase in the return I see from my dividend returns. That's the strategy that I'm following at the moment. It might change in the near future, but I'm going to keep going with that for the time being. I'll probably be adding on a monthly basis about £500 to the account, so over time should see some solid growth. Forecasting the dividends will be maybe £5-6 average for the next couple of quarters, but then in a year or so's time I'd hope to see a substantial increase on that as the effects of the dividends start to compound, the effects of my deposits to the account start to compound as well. So as I said before, lengthy journey, but you've got to start at the beginning and build the account and build the size of returns. Hope you found that interesting. I'll try to have added some fancy graphics in to show a bit of a breakdown as to each item and link you to the tickers for each of the assets that I've invested in here. Thanks for listening. I'll see you again soon.